Hello friends, welcome to Learning Sessions, and today in this video we are going to discuss the second chapter from the module A of BFM, that is related to the LRS and the other remittance facilities available for the residents over there. So do watch this video till end, and let me tell you that CIIB classes have been commenced from today itself, and we have been covering the latest updates, the latest chapters which have been covered in the latest syllabus covered by the IIBF in the exams of CIIB over there. So if you are preparing for CIIB 2023, do watch the video series where we have been covering the ABM, BFM, BRBL update courses over there, and moreover the full course for CIIB is also available in Hindi mixed English language and also available in English only language. The link is iibf.info, so do visit the website right now so as to enroll to the courses. And further, if you're an Android user, you can download our application, that is IIBF Learning Center, and if you're iOS user, do download My Institute application and use the organization code listed over here, that is JAIIB. Further, having any query, you can get back to us on our WhatsApp number 836094427. We will be resolving the query, or whatsoever the issue you will be facing we will be basically replying to on the same over there. So let's start the session over here. It's related to the chapter that's LRS and other remittance facilities for the residents over there. So whenever it comes to the forex, the provisions for the same are covered in the FEMA, that is Foreign Exchange Management Act 1999 over there. And further, when we talk about the transactions of forex, there are two types of transaction. One, it is a current account transaction and the capital account transactions over there, and the definitions have been covered under the FEMA 1999. Okay, so the capital account transaction is covered under the section 2E, and the current account transactions are covered in the section 2J over there. Now, what is capital account transaction and what is the current account transactions? Let's have a look at it. First of all, it's related to the capital account transaction. Now, the transaction which are going to alter the asset and liabilities of a person who is resident in India, the transaction is going to alter the asset and liabilities in the foreign country over there. That's a capital account transaction. And also a person who is resident outside India, and further, if a transaction is altering the assets and liabilities of the person over here in India, that's also capital account transactions. And these assets and liabilities are also including the contingent liabilities over there. Contingent liabilities are those liabilities which can crystallize themselves in a coming time over there. That's the contingent liabilities. So those are what? Those are the capital account transactions covered under section 2E of the FEMA Act over here. And any of the other transactions which is not to be a capital account transaction, that is what? That is a current account transaction. Okay, let me just give an example. Let's say the case that a person A over here purchases immovable property over here in a foreign country. That's particular what? That's a capital account transaction because it altered the assets and liabilities of a person outside India. Okay, so it's a capital account transaction. And also, if an NRI is going to purchase a property over here in India, that's going to alter the asset and liability position of the NRI over here in India. That will also be a capital account transaction. Okay, and what is current account transaction? Which is not capital in nature, that is a current account transaction. So whether it has been the amount which has been remitted to the family for the maintenance purposes, for medical treatment purposes, and any of the other purposes, like I want to basically expend it in connection with my travel over there, or I want to basically investment I have made, I am basically having the income on it. So if I'll be making investment abroad, that is what? That is a capital account transaction. But the income I'll be having from the particular investment over here, that's a current account transaction. Okay, so that is actually the capital account transaction and current account transaction. Now the current account transaction is freely there in case of the LRS, that is a liberalized remittance scheme over there. In capital account transaction case, there are liberty in some cases, but definitely there are some cases where there is no liberty. Let's understand those all the cases over here. Okay, now let's move further. It's related to the topic liberalized remittance scheme, important sections over there. First of all, it's related to section 4. Now section 4 states that the residents cannot be acquiring the forex outside. Like if I want to purchase a property outside, if I want to do something outside, if I want to own, if I want to acquire, if I want to possess, that is not allowed until or unless the permission is given under the FEMA over there. So any kind of foreign exchange property, any kind of a foreign exchange outside India or foreign securities over there, those cannot be acquired, those cannot be held, those cannot be possessed until or unless you have actually owned them or acquired them or possessed them or held them when you were not a resident Indian over there. And also, if you are holding them, owning them with particularly extended guidelines over there, that's also allowed. Otherwise, you cannot hold or own or acquire such properties over there. Okay, that's actually related to it. And section 6 is related to what? It's related to permitted capital account transaction. Now I told you clearly that the current account transactions are freely allowed by the Reserve Bank of India, but there are some still restrictions which are imposed in case of the capital account transaction. Now capital account transactions can be conducted through the authorized dealer. Only such classes of the capital account transactions can be conducted which are actually permissible, and those can be taken place up to the permissible limit only. That's actually mentioned in section 6, and section 10.6 it particularly says that whatsoever the forex that we have acquired, let's say the case that I'm going to go abroad and I have acquired the forex for the same, that I acquired the foreign exchange or foreign currency notes, etc., and particularly I have not utilized that particular currency over there. So whensoever I'll be returning back, I am to surrender that particular currency over there. That's the case, I am to surrender that particular currency over there. If I'm not going to surrender the currency up to some certain limit over there, that is going to the contravention of the FAME Act over there, and a penalty can be imposed on me. So that's the case related to it. So that's actually related to utilization of forex. So whatsoever the forex you have obtained, that must be utilized for the same purpose only and not for the other one. And further, if it is not utilized, it must be surrendered within a stipulated time period that is actually mentioned under the FAMA over there. And if it is not surrendered, it will be a contravention to the provisions of the act over there. Then further, it's related to the section 11 that the Reserve Bank of India may give the directions to the authorized dealers over there. Now under the FAMA, that is the Foreign Exchange Management Act 1999, Reserve Bank of India is empowered so as to maintain the forex in India over there. And further, Reserve Bank of India is going to particularly issue the AD license, that is authorized dealer license, or AP, that is authorized person license, or FFMEC, that is a full-fledged money changer license over here. And particularly RBI can give directions to these that you should not be basically sanctioning the foreign currency to some persons, or you must be reporting guidelines. Those can be particularly issued by the Reserve Bank of India. And further, if these personalities, if these particular institutes over here are not complying with the same, in that particular case, Reserve Bank of India can impose a penalty on the same. And that is actually said that whatsoever the information which was actually to be furnished by authorized person, authorized dealers to the Reserve Bank of India, and that if that is not furnished, or the we can say correct information was not given in time, in that particular case, penalty of rupees 10,000 can be imposed. And moreover, if there is continuing contravention, they had never particularly submit the information, they never furnish the information, and further they are contravening with the same over there, that they are not still furnishing the information, in that particular case, rupees 2,000 penalty per day can actually be imposed for the continuing contravention over there. Otherwise, penalty of rupees 10,000 will be imposed. That's actually related to section 11 of the FAMA Act over here. And further, it's related to what? It's related to section 13, penalty for contravention. Let's say person A over here who is contravening with the whatsoever the things were there mentioned in the FAMA over there, person A is contravening with the same. Now in that particular case, a penalty can be imposed. Let's take the case that a transaction, foreign transaction amounting rupees 2 lakh was there, which were contravening with the provisions of the FAMA over there. Okay, now in that particular case, the amount is quantifiable. Now in that particular case, penalty up to 3 times of the quantifiable amount can be imposed. And further, where the amount is not quantifiable, let's say the case person B has undertaken a transaction but the amount is not quantifiable, in that particular case, penalty of rupees 2 lakh can be imposed. Penalty of rupees 2 lakh can be imposed if it is not quantifiable. And moreover, if the contravention is continuing in nature, then rupees 5,000 per day penalty can be imposed further. That's the provision related to section 13 over there. Okay, so section 11 is related to penalty, section 13 is related to penalty over there. And then further, it's related to the remittances under the LRS over there. So there are 3 schedules. Schedule 1 actually deals with such transactions which are prohibited. Schedule 2 deals with such transactions which require the prior particular approval from the government functionaries over there. And schedule 3 is related to the transactions which are permitted over there. Okay, so first of all, we are going to cover the schedule 1, that the transactions which are not permitted or which are prohibited under the LRS over there. First of all, it's related to if you're going to send the margin, if you're going to basically remit the margins over there, that's not permitted. Let's say the case that there is a company over here and further a margin is to be remitted. A margin is to be remitted to the overseas exchanges or overseas counterparties. That's not the case. That's not allowed. And further, let's say the case that you have exported something and further a commission is to be particularly given outside. Let's say the case that you have export turnover of 200 crore and 10% commission is to be given. Okay, it's not the case that 20 crore rupees can be remitted outside India just for commission purposes. That's not allowed. So export commission cannot be actually be sent overseas over there. And moreover, when you're providing the callback services, like you have a call center on the telephone, and further you're not going to basically remit the payments related to same. Okay, so that's not allowed. And further, remittance cannot be allowed related to banned products or prescribed magazines over there. So that's not allowed even. And further, if you're going to purchase a fully convertible foreign currency convertible bonds over there issued by any of the Indian enterprise abroad over there, that's not allowed. So let's say person A is the Indian citizen, and further he wants to buy the FCCBs issued by the by the Indian country abroad over there. That's not allowed over here. That's the case. And further, remittance of dividends by any company where the dividend balancing is applicable. So wheresoever the dividend balancing is applicable, dividend cannot be sent outside. That's the case. And further, the interest income on the funds of held in the NRO special rupee account cannot be remitted outside. So whatsoever the interest amount will be earned by the NRI person over here, so that can only be remitted outside, subject to the TCA, subject to the taxes and the applicable laws over here. For that particular purpose, a limit of 1 million USD has been prescribed. That 1 million USD per financial year only can be remitted, and not more than that, and that is also subject to the taxes, deduction of taxes over there. Okay, and further, if I have won lottery, or if I won from any of the hobbies or any of the racing or riding activity, that remittance cannot be made for such amount. And moreover, payment of commission of exports, I have already told you that payment of commission of exports is not allowed, whether it's an individual case or whether it's a case related to the rupee state credit route over there, that a state provided you some subsidy and further you made the export and now you want to basically send the commission abroad. That's not the case. That's not allowed over there. Okay, so these are actually related to the things where the remittance is not allowed, where the forex transaction is not allowed as per the schedule 1. And schedule 2 deals with the remittance permissible. For that particular purpose, prior approval is required from the government department and the ministries over there. Like you want to basically conduct a cultural tour over there, and for that particular purpose you want to basically remit the amount outside, for that is allowed, but you have to take prior approval from the Department of Education and Culture, Department of Human Resources Development over there. And if your advertisement is to be done like in print media by the state governments or by the PSUs over there, in that particular case the permission is to be taken from the Ministry of Finance. And further, it's related to that state government or PSUs have particularly hired a chartered over there. Chartered is particularly to ship. They actually hired a ship, and further for freight purposes they want to basically remit the money outside. That is also not allowed. And further, prior approval is to be taken from the Ministry of Surface Transport. And also if they want to basically make a ocean transport, like by the seaway over there, they want to basically transport something and the freight is to be paid, the permission is to be taken from the Ministry of Surface Transport over there. And further, remittance of hiring charges for transponders by TV channels. Now TV channels are there and they're hiring transponders over there or internet service providers over there. They are to make payments outside. That is allowed, but they have to take prior permission from the Ministry of Information and Broadcasting and Ministry of Information Technology over there. And if there is any prize money which has been won under the sports, or is to be given or is to be rewarded, and the amount involved is USD 1 lakh or more over there, in that 1 lakh more over there, in that particular case the permission is to be taken from the Department of Youth Affairs and Supports, Affairs and Supports, and Ministry of Human Resources Development over there. So these are the cases you need to take an account for, that must be kept in mind. Okay, and the schedule 3 is related to such transactions which are permitted, and for that particular purpose these powers have been delegated to the authorized dealers over there. So authorized dealer is kind of a bank only, which is actually authorized by the Reserve Bank of India, that you can take up these transactions, but authorized dealers are to take care of the due diligence. Now when they are dealing with the customers over there, they have to take care of the due diligence. Due diligence means KYC documents, they have to obtain the PAN, they have to obtain the declaration related to sources of funds over there, and further the required documents are to be taken and are to be preserved, so that whenever an inspection or the information is to be furnished to the Reserve Bank of India, that can be furnished without any issue over there. So that's a case related to authorized dealers. Now let's have a look at the transactions which are permitted. First of all, it's related to, like, you are going to visit for a private visit outside in any country except then Nepal and Bhutan. You can take you can particularly remit the money for that, and for gift and donation, that is actually allowed. You can if you're going outside for employment purposes, for immigration or emigration purposes, if you're going to basically send the money for the maintenance of your close relatives over there, if you're going to go abroad for a travel business purposes, that is also allowed. If you're going to if you're going to basically have a medical treatment outside, you can take money amount up to rupees 2,50,000 USD per financial year. So for these all the cases, you can actually be remitting the money outside. You can actually be remitting money outside under the LRS, that is a liberalized remittance scheme, up to an aggregate amount of USD, not rupees, USD 2,50,000 USDs over here. So that's the case related to it. Okay, I hope that you must have understood. Now let's bifurcate these cases and understand the basics of these in abroad. Like even if you're going for studies abroad, if you're going to purchase an article for yourself, for your personal use, not for commercial, not for commercial use over there, and that is compliant to the foreign trade policy over there, definitely you can actually remitting the amount outside. And further, for other purposes like for health insurance purposes, you can remit them outside. So that's the case related to it, where under the LRS, up to an aggregate limit of USD 2,50,000 per financial year, you can remit the amount abroad over there. Further, it's related to, let's have a look at the general guidelines over there. So I told you that PAN is compulsory, whether you're going to remit $1 or $2,50,000, PAN is compulsory. And if you're going to remit the abroad over there, in that particular case, those are accountable for the you can actually having a combination of the current account transaction, or it can be a combination of both capital account transaction and the current account transaction, but the aggregate amount must be maximum equal to 2,50,000 USD. And further, if it is going to exceed the same, in that particular case, RBI approval is to be taken. Prior approval from the Reserve Bank of India is to be taken over there. That is the case related to it. And further, the authorized dealers are to comply with the appropriate guidelines over there, like whatsoever the customer interface will be given, whatsoever the we can say whatsoever the transaction details are there, those are to be reserved and must be as per the provisions of the FEMA over there. And further, customer is to designate a particular branch. It's not the case that you're going to basically remit the amount using one branch today and another branch today. It's not the case. You have to basically designate a branch, and you must be complying with all the transaction. If you're going to basically remit the money over there, you must be remitting the money using the same bank branch only. And there must be minimum relationship with the AD over there for 1 year. And whenever the new account is to be open, AD is to perform the due diligence. As I've told you, they are to obtain the PAN, they are to obtain all the KYC document, they are to obtain the 1 year bank statement over there, so as to assure the sources of the funds over there. And whenever some suspicion is there, STR is to be filed. Okay, so that's the case related to it. And there is no restriction on the frequency of remittances. It's not the case that the amount is to be remitted in 1 transaction or 10 transactions. It's nothing like that. But the aggregated amount in 1 financial year is maximum up to 2,50,000 USDs. And if the amount is exceeding, in that progress, prior permission from the Reserve Bank of India is to be taken. And further, if a sole proprietor is going to remit the money outside, debiting the current account, that is to be reckoned and must be added to the personal capacity of the person over there. Let's say case there are 2 accounts. One is a saving fund account and the other one is a current account over there. And firstly, he paid the amount of rupees 2,50,000 USDs debiting his saving fund account. Okay, and now he want to pay the amount using the debiting the current account balance over there. That's not allowed because he is a sole proprietor concern, and that will be particularly accountable as one limit only. Okay, so that's the case related to it. International debit card, international credit cards, ATM cards, those can be used for the current account transactions. Those can be released, but for capital account transaction, the amount is to be routed through the account only. Okay, and for the senior citizens of the foreign state, except the case of the Pakistan and the residents of India who are actually going to stay over here in India for a longer period, but not more than 3 years. Let's say the case as per the IT Act, actually, if the person is staying in India for a period greater than 182 days in the previous financial year, in that case, the person is deemed to be a resident of India. So such that persons who are there in India for employment purposes, but not on permanent basis, and they have been in India for a period lesser than 3 years, for that particular case, they can be remitting the amount using the LRS scheme over there, but they are to this particular LRS transactions are subject to the deduction of TCS, TDS, or any of the share or contribution that is to be deducted. Okay, so that must be kept in mind. So after that, it's related to any of the amount that is above the LRS limits, prior approval from the Reserve Bank of India is to be taken. I have already told you. And further, the authorized dealers are also to obtain the bank statement. They are to obtain the ITR, so as to basically look into the sources of funds over there. And wheresoever they are seeing that there is actually leverage in the funds over there, and the person is not able to disclose the source of funds, that must be acted upon as a suspicious activity, and that must be reported under STR, that is a suspicious transaction report over there. Now let's have a look at the documentation. So RBI have not prescribed a set of documents that is to be obtained when a person is going to remit the money outside. But as I told you that authorized dealers operator has to basically keep the due diligence with the customers over there, and for that particular purpose they must be obtaining the form A2 over there. So form A2 must be obtained, and wheresoever the AD is satisfactory and the amount the person is going to remit is up to USD to 25,000 only, in that particular case simplified documentation can be allowed. Declaration form related to the sources of funds is to be submitted by the remitter over there, and moreover PAN is compulsory irrespective of the amount over there. And if you are going to basically take the money or remit the money for travel purposes, in that particular case copy of the confirmed ticket and visa is to be taken. That is the case related with. And wheresoever the services of tour operator are being availed, like there is a tour operator who is basically going to deal with the customers over there, and on their customers behalf they are going to deal with the authorized dealer over there. So in that particular case authorized dealer can deal directly with the tour operator over there, but whatsoever the remittance or transaction will be done by the TO over there, the taxes would be applicable, the TACS would be applicable in all the particular regards over there. Okay, so TCS is applicable in respect of release of exchange by the tour operators irrespective of the threshold limits. But for the individuals, the TCS threshold limit is rupees 7 lakh. It is rupees 7 lakh, that up to rupees 7 lakh if remittance is made, no TCS will be deducted. For what? For whom? For the individuals over there. But for tour operator, irrespective of the thresholds, the TCS would be applicable. So that's a case related to it. I hope that you must have understood the case. Okay. Now let's move further. It's related to remittances under the LRS, that current account transaction. I told you that whensoever you're going for the private tour visit or for the business visit over there, you're going to study abroad, you're going to send money for the maintenance of your family or the close relatives over there, whether it's related to gift or donation purposes, or whether it's related to medical treatment purposes. Okay, for emigration or immigration purposes, you can actually be remitting the money with an aggregate amount of 2.5 lakh USDs per financial year over here. So that's the case related to what? That's the case related to the LRS over there. And for that particular purpose, if you want to obtain the foreign currency notes, you can give 50,000 in cash, maximum rupees 50,000 in cash, so as to obtain the foreign currency notes, and not more than that. If you want to basically obtain foreign currency notes more than this particular amount, in that particular case the transaction must be routed through the account only. Okay, so that's the case. And further, if the unutilized foreign currency is there, that must actually be surrendered within a period of 180 days to the authorized dealer. Like you came back from the abroad, and from the date of you have returned from abroad, within 180 days the foreign currency must be surrendered to the authorized dealer over there, otherwise it will be accountable for the contravention of the FEMA over there. Okay, and further, if the person is actually is a Hajj pilgrimage, because there is actually there is a limit related to what amount of foreign currency notes can be obtained. It's not the case that you can obtain the foreign currency notes amounting 1 lakh USD. It's not the case. Okay, but if you're a Hajj pilgrimage, in that particular case, for full currency convertible is allowed. Like if you want to take the foreign currency needs for 10,000 USDs, that is allowed in that particular case. Okay, and further, if you are going to proceed for the Islamic Republic of Iran, Russia Federation, etc., in that particular case also full convertible to the foreign currency notes is allowed. But if you're going to Libya or Iraq, in that particular case you can actually be converting the currency maximum up to 5,000 USDs. Okay, if you want to get the foreign currency notes, you can obtain the foreign currency notes amounting 5,000 USDs at most. Okay, not more than it. Okay, if you're going to Iraq and Libya over there, and if you're going to move to any other country except Bhutan and Nepal over there, you can obtain foreign currency notes amounting USD 3,000, maximum up to 3,000 only, not more than it. Okay, so that's the case related to foreign currency notes. And if you're going to gift to some person over there, now you can actually give to close relative. Now what is the definition of close relative? Let's have a look at it. That definition is actually covered under the Companies Act over there. So if you are going to gift it to a member of HUF, for that particular purpose you have to give the documentary proof for the same, and it could be the husband wife also. It could be related to, like let's say the case that it could be related to that this is individual, so he can gift it to spouse, he can give it to his father, he can give it to his mother, he can give it to his son, his daughter, or stepson and stepdaughter over there. Not stepdaughter is not covered, it's related to stepson, and the daughter's husband is covered in that case. So that's definition that is covered under the Companies Act 2013 under the close relative over there. There are some relations which are not covered, like grandchildren are not covered. Okay, like grandchildren are not covered, and further father's father father is not covered, mother's father is not covered. So that's the case related to which are not covered. But you are just take a note that who are covered, that you are just take a note that who are covered and not to be covered. That's not actually that much important over there. Okay. And further, a resident cannot gift to another resident. So it should not be the case that the person A is going to gift person B over there, and person A is having a foreign currency account over here in the other country, and B is going to give a credit to the value of such gift to person A over there. So that's actually not allowed. That's actually not allowed in that particular case. And if we talk about the donation, that is also allowed. You can actually be donating to a person or an organization outside India over there. And if we talk about the emigration, a person can actually remit amount 2,50,000 USD per financial year in aggregate to the LRS limit over there, but a more amount can also be remitted outside if that is actually asked for by the company itself. Okay, so if actually required by the company, by the country law under there, that higher amount is to be remitted over there, that's actually also allowed. Okay, then further it's related to if you're going abroad for employment purposes, you can take the amount. If you're going to basically send the maintenance to your close relatives over there, that is actually defined under the Companies Act 2013 under section 2 subsection 77 over there. That's actually allowed that you can actually be sending the money, remitting the money to your close relatives outside there. And further, if you want to actually purchase a object of art for yourself, for your personal use but not for commercial use, and that is actually covered under the foreign trade policy, because foreign trade policy says what that the further import of such certain goods which is actually prohibited. So it should not be such kind of article, but otherwise it is allowed and you can remit the money for the same. And further, it's related to if you're going to abroad for your business trip, like for travel for business, if you're going to attend the conference or specialized training is going to be there, you can remit amount up to 2,50,000 USDs maximum at there. And further, if the person is to be employed, if the person is to be trained by the company itself, in that case there is no limit of the remittance. This particular remittance limit is applicable for the individuals only and not for the company over there, because if the company is going to basically make up all the expenses over there, in that particular case there is no limit that is going to be imposed, because that will not be covered under the purview of the LRS over there. Then further, it's related to expenses in connection with the medical treatment abroad. Like if you want to basically go for a medical treatment abroad, in that particular case, actually there will be general declaration by the doctor outside that this much expense can be there, and based upon that particular slip, the amount can be remitted by the AD over there. And also, if higher amount is to be remitted and a particular prescription related to that, what amount will be the expended over there by the medical institute outside India, that will be given, an authorized dealer can actually remit a higher amount too. And also a person who is going to be attendant or to the patient over there, that can also bring 2,50,000 USD outside there. Okay, so that's the case related to it. And then after that, it's related to studies abroad. So if you're going to study abroad, you can take an amount 2,50,000 USD outside. But if you want to basically, if you have already secured a position, if you have already secured a seat in the reputed organization, reputed university over there, and if it is required by the university law that further amount is to be taken or that is to be remitted outside, that can also be allowed by the AD over there. But it should be kept in mind that no guarantee in favor of the university can be issued. Okay, so it's not the case that the bank authorized dealer is going to issue a guarantee in name of the in the name of the university over there, abroad university over there. So that's actually not allowed over there. And students actually who are going to study abroad, whatsoever the saving funds account they were maintaining, those all are to be accounted as those all are to be accounted as NRO accounts over there, because the student who is going to abroad for study for is going to abroad for study purposes, he will be actually be the NRI now. He will be actually be the NRI now. So whatsoever the account he was maintaining, those all accounts will be converted to the NRO category over there. And I told you already that under the NRO category over there, it's allowed that you can remit an amount up to 1 million USD per financial year. Other than that, the LRS over there. Okay, so that's the case related to it. Then it's related to TCS. So previously TCS was not applicable on the LRS transactions, but the Finance Act 2020, there was an insertion on the Income Tax Act on the TCS that 5% TCS will be deducted on all the transactions of LRS which are over and above 7 lakh over there. And for non-PAN account holders, the amount is to be deducted is 10%. The amount of the TCS that will be deducted will be 10%. And further, if the remittance is to be made and the amount of remittance, the source of amount of remittance is from the education loan, it is from the education loan. In that particular case, the TCS will be applicable 0.5%. Okay, so that's the case related to it, and that's the case that you must be considering. Okay, and let me just tell you, this TCS is also applicable when you're going to remit the amount from NRO accounts over there under the LRS. So the TCS will also be applicable in that particular case also. Okay, so let's have a look at the example over here. So customer A is a PAN card holder. Okay, customer A is what? Customer A is PAN card holder, and he remitted rupees 6,50,000 on 4th of April 2021. Okay, now I told you that up to 7 lakh rupees no TCS will be applicable, so no TCS will be deducted. And further, he actually made a remittance of 9,50,000 ahead in the same year, in the same financial year. So it will be aggregated. So total amount will be total amount over here is 16 lakh over here, and up to 7 lakh rupees no TCS is to be deducted. So TCS will be deducted on 16 lakh minus 7 lakh, that is 9 lakh rupees only, and 9 lakh 5% would be equal to 45,000. So 45,000 TCS would be applicable. And in the same year, on 10th of December 2021, he remitted 40,000 rupees. So TCS of 5% will be applicable, that is amounting rupees 2,000 rupees. So that's the case related to it. I hope that you must have understood it with the example over here. Okay. After that, it is related to LRS capital account transaction. Now, I told you that there is actually group of transaction, class of transactions under the capital account transaction, which is actually permitted over there. So there is actually a funda related to that the individual is given. Individual over here is given an opportunity that individual can be investing into the IFSCs, which are actually set up under the special economic zones over there, so as to diversify their portfolio. So it's related to an investment where the individuals can be investing into IFSCs over there. IFSC is what? It is International Financial Services Centers over there, where they can be investing the amounts. So these IFSCs will be outside India, and these will be maintained by the Indian entities over there. These will be maintained by the Indian entities over there. So whatsoever the securities IFSCs are having, the individuals can be investing into those securities over there, so as to diversify their portfolio. So as to diversify the portfolio, they can be actually be investing into these over here. So that's the case related to it. And further it's related to, for that particular purpose, the individuals are allowed that they can be opening a foreign currency account abroad. They can be opening a foreign currency account abroad over there, and for this particular purpose, the remitted amount can be actually be deducted from the FCA over here, so as to invest into the IFSCs over there. And further, if there is idle balance, if there is idle balance which is not in use, and the balance is lying idle for the last 15 days, that is to be repatriated to India. That is to be repatriated to India into the domestic INR account that is maintained by the individual over here. And further, no domestic transactions are permissible in the FCA account in that particular case. So that's the case related to it. Okay, so it's not the case that you are holding USD 1 lakh in FCA over there, and particularly you are going to use that particular 1 lakh USD for your domestic purposes over there, or for some particular personal transaction over there. So that's not allowed in that particular case. Okay, now the capital account remittances which are allowed under LRS, let's have a look at it. Okay, so for that particular purpose, you can actually be using the amount for purchasing the immovable property abroad over there. You can be making investment abroad. Investments can be made in the JWs, that is in the joint venture, in the JVs, that is the joint ventures, or it can be in the wholly owned subsidiaries over there. You can acquire the shares of the company. You can be actually be investing into the capital of the company. You can be infusing the capital into the company, like you are subscribing to the MOAs over there. Okay, so what can you can be actually be having a investment, because I told you that capital transaction is one transaction that is going to alter your asset and liabilities over there. So that will be a capital account transaction. Now let's take your person A, and you're going to invest into a JV or wholly owned subsidiary over there. Okay, and further you're going to subscribe the shares of the company. You're going to subscribe to the MOA, that is a memorandum of association of the company over there, or it could be also be the case that you're going to particularly subscribe the qualification shares. Now what are qualification shares? Like if you want to be director, you must be having some certain number of the shares over there, and for the only then after that you will be qualifying as a director over there. So if you want to be basically a director over there, you must be purchasing such amount of shares over there. So that's related to qualification shares. Okay, so if you're going to subscribe the qualification shares, if you want to acquire the qualification shares, you can remit the money for the same. And further, if you want to buy the units of mutual funds or venture capital funds, unrated debt funds over there, or setting up JV JVs or WOS outside India, where the JVs or the WOS is engaged in a bona fide business only and not in some illegal activity over there, that is allowed. And let me just tell you that the direct investment into JVs and further into JVs or wholly owned subsidiaries, that is allowed, but that particular JV and wholly owned subsidiary must not be in the real estate business, that must not be in the real estate business, engaged in real estate business, or that must also not be engaged in the banking business or financial services business over there. So that must not be the case, otherwise you can invest into such JVs and wholly owned subsidiaries over there. Okay, and further you can also be extending loans to your close relatives over there, but whensoever you're going to extend the loans to your close relatives or NRIs over there, that loan must be a known interest bearing loan. That loan must be a known interest bearing loan and must be given for at least period of 1 year in that particular case. Okay, so that's the case related to it. A resident individual is prohibited for making the direct investment where the direct investment in JV and WOS cannot be made, where the JV or WS is engaged in real estate business or in banking business or business of the financial services activities over there. And further, what things are to be complied with for capital account transactions? Let's have a look at it. First of all, the resident must be having a designated branch over there, designated authorized dealer over there, through which all the transactions are going to take place. Okay, so there will be a designated branch over there, and moreover related to it, the individual must be maintaining account with the branch for a minimum period of 1 year. For minimum period of 1 year, the account must be there. If the account is not maintained for 1 year, the authorized dealer will be having the due diligence related to the customer over there, related to PAN card, KYC documents, account statement for previous 1 year, ITR is to be obtained, that is to be audited by the CA over there or FCA over there. So that must be the case related to it, and only after that the remittance will be made. And remittance that will be made for purchasing the property over there, that must be in the aggregate limit of 2,50,000 USDs per financial year over there. And further, so as to support the capital account transaction. Now I want to make a capital account transaction, and so as to support the capital account transaction, no credit must be given. No credit must be given. That must be kept in mind over there. And remittances can be consolidated in respect of the family members, subject to the individual family members complying with the terms and conditions over there. That can be consolidated. Okay. Now overseas direct investment is actually related to what? What is ODI? What is ODI? ODI is actually related to what? It is overseas direct investment. So I want to invest money outside, but directly into some JV or wholly owned subsidiary over there. So that's the case related to it. And it will be related to that I want to infuse capital into these companies over there. I want to subscribe to the MOA of these companies over there, or I want to basically purchase the shares outside through a private placement. Okay, so that's related to direct investment. That is actually related to direct investment over there. Okay, so this can be particularly by this particular manner over there. Okay, and further, a resident individual can actually be having ODI over there, that is allowed, but not into such JVs or WS which are basically engaged in the business of real estate, as I told you, or which are engaged in the business of banking or financial service activity over there. So that's not allowed in that particular case. And further, investment can be made within a maximum amount of 2,50,000 USD per year per financial year over there. And investment in existing JW and we are going to basically invest into some joint venture and into some wholly owned subsidiary over there. And further, let's say the case, investment is to be made and the valuation is to be done. Okay, so if you're going to invest into these JVs, or we can say investments are to be made in these wholly owned subsidiaries over there, and invested amount is greater than 5 million USD. So in that case, the valuation is to be done by independent category 1 merchant banker who is registered with the SEBI over there, or it can be done by some authorized valuer or merchant banker which is actually regularized under some reputed global entity. Okay, so that those can make actually the valuation of such investments over there. And where the investment amount is actually less than 5 million USD, a certificate is to be given by CA or CPA. it is to be given by CA or CP over there. And whatsoever the amount due, whatsoever the amount is due, like you made investment in JV and for the wholly owned subsidiaries over there, and they were to give you a dividend over there or some royalties over there or somewhat amount that was actually due at their end, and for that amount was due, so that must be repatriated. That must be repatriated. Whensoever this amount will be falling due, that amount must be repatriated back to India within a period of 60 days. Within a period of 60 days, that must be repatriated back to India over there. And further, disinvestment in these JWs, in these JVs, not JWs, in these JVs and further WS, this investment is allowed only after period of 1 year, not more than that. Not more than that. And no write-off allowed in respect of disinvestment. Now, it's not the case that you made an investment of USD 1 million over there, and further later on you particularly said that there was a loss accumulated and you're going to write off this amount in your books. It's not the case. That cannot be allowed. That cannot be allowed. Okay. And further, whensoever you're going to invest into some JV or WS, those must not be the FATF companies. Okay, so those must not be the financial action like there's a list actually given by the FATF, that is Financial Action Task Force. So the companies in which you're going to invest, those must not be in the list by the FATF or by any of the quotient list over there. Okay, so that's the case related to it. And so as to invest into these companies, the ODIs over there, you can actually be debiting the funds that you are having in your EFC accounts, that is your exchange general foreign currency accounts, or in the RFC, that is resident foreign currency accounts. You can be debiting your balances in these accounts and can be investing into these companies ODIs over there. Now, let me just tell you that the resident individuals who are going to invest, those must not be in the quotient list, those must not be in the defaulter list or any investigational list by any of the enforcements over there. So that must be the case, that must be looked into. Further, if you look at the documentation, that form A2 is required. As I told you in the previous cases also, that for documentation form A2 is required, PAN card is mandatory over there, and further other than that, if the transaction amount is maximum up to 25,000 USDs, in that particular simplified due diligence can be there, and the declaration related to sources of funds, declaration related to the sources of funds to be given. And further, there is a ODI form, and ODI form is there, which is actually in two parts, part 1 and part 2. Part 1 and part 2 over there. And further, part 1 of the ODI form is to be submitted within 30 days. So the customer is to submit part 1 ODI form within 30 days from the date of transaction, from the date of remittance over there. And further, within a period of 30 days from the submission of the documents, the remitter, that is the authorized dealer, not remitter, the authorized dealer is to submit these two forms of ODI forms to the Reserve Bank of India. These forms are further to be submitted to the Reserve Bank of India. Okay, so that's the case related to it. And further, because you have invested into the company outside and you have made a direct investment, so you must have acquired some of the shares, you must be having some certificates related to that. Okay, so whatsoever the proof of investment is there, that is to be submitted back to the AD within a period of 6 months. Within a period of 6 months from the date of remittance, the proof is to be submitted with the AD over here. And further, if post investment, let's say I wanted to purchase 1000 shares over there, but I changed my mind and I purchased only 980 shares, okay, or 900 shares, so there was alteration. Okay, so now this alteration is to be reported within 30 days of such changes. Okay, so whenever you have made the changes within 30 days, such changes are to be reported to the AD over there. And moreover, this must be actually be whatsoever the amount which has been remitted for direct investment purposes, that must be indicated in the annual performance reports. And this investments is allowed only after 1 year. It's not the case that you have remitted the money today for investment purposes into some as per the ODI over there. It's not the case you are going to disinvest the same in the same year. It's not allowed over there. And further, whensoever the disinvestment is made, so let's say the case that A invested the money into XYZ ODI as an ODI over there, that is overseas direct investment over there. Now in that particular case, the disinvestment is allowed only after 1 year. And whensoever the disinvestment will be allowed, just within maximum of 60 days of the disinvestment, maximum of the 60 days of the disinvestment. And after 60 days, within maximum of 30 days, this amount is to be repatriated to the India over there, and that must be reported. Not repatriated, that is to be reported only, not repatriated. It must be reported to the AD over here, through which the amount was remitted, the AD is to be particularly reported that the disinvestment has been made, okay. So that's the case related to it. And whenever I told you that loan can be granted by the person to the close relatives over there, that the close NRI relative over there, the loan can be sanctioned, but that will be a non-interest bearing loan. That will be a non-interest loan over there, and for a minimum period of 1 year the loan is to be sanctioned over there. And borrowers personal, it can be actually be sanctioned for borrowers personal requirements, like you are to give a loan to your NRI close friend, that loan can be given for personal requirement, that loan can be given for the business requirements over there. And from where NRI will be paying back this loan, it can be repaid from the inward remittances. So whatever the amount is inwardly received by the NRI, the amount can be repaid from these sources, or it can be paid by debiting the NRO accounts or EFC account, or particularly NRE accounts over there. So whatever the accounts where the foreign currency balances are maintained, the NRI person can pay it from those balances over there. So that's the case related to it. And let's have a look at the reporting requirements under the LRS. Reporting requirements under the LRS. So previously, actually, what was there? It was all based on the declaration, that whatsoever the declaration will be given by the customer over there, that was to be submitted to the Reserve Bank of India. But from 2018, that's not the case. So there is a portal. There is a portal where the authorized dealer are to submit the daily transaction basis, or the daily category based transactions are to be uploaded on this portal over there, and all the data will be shared among the authorized dealers over there so that they can have a look at it. Okay, so but what is the main purpose? That whenever the declaration is to be obtained from the customer, it will be cross-checked from the portal data over there. Okay, and this data is to be submitted. Let's say the case today is 20, and I am having 10 transactions. Those are to be reported by the day end of 21. That is to be reported into this portal by the day end of the day of the 21. That is the next day over there. And further, even if I have no transactions, that is a nil transaction, so nil report is to be submitted. In that particular case, the nil report is to be submitted, and that is actually reported on what? That is actually reported on the XBRL platform. XBRL platform over there. Okay, and that is a case related to it, and I hope that you must have learned the concepts little same. So do rate the video out of 10 and do enroll to the courses. Just do visit the website iibf.info and further start preparing for the same. Do download our Android application that is available in the name of IIBF Learning Center. If you're Android user, do download IIBF Learning Center application, and if you're iOS user, do download My Institute application and use the organization code JAIIB. Do not forget to use the coupon code EXAMS so as to get flat 82% off on all the listed courses. Okay, so do enroll right now and start preparing for the same. Thank you so much, and see you again in the next video.